Liana, and I have my email address up there. I'm your B03TA this semester. I'll be teaching 4 of the tutorials. I think there are more than this, so you guys can go to another TA if you prefer. I don't think it will take us more than an hour to go through the 3 questions that we're going through today. So if you have questions after class, come over and ask me. But let's go through the questions we have. Does everyone have a book in front of them? Or if not, can you guys share a book with someone else? The first question we're going over is Chapter 1, Question 25. Everyone have it? Do you need a moment? It's on page 32. So it says, there's a service that lets people subscribe to DVDs 3 at a time for $21.95 per month. At the same time, you can also go to another place and rent DVD for $3.95 at once. It's asking you how many DVD do you have to rent per month to be indifferent between the cost of renting movie from the video store at $3.95 each or subscribing to this service. I think this is a relatively easy question. So you have this service. $21.95 per month. Another video store. How many DVD do you have to rent to be indifferent? So X equals the number of DVD you rent to be indifferent. Which will be if you solve X, anyone knows the number? How many DVD do you have to rent per month to be indifferent? What is X? Does anyone have a calculator? Six? It is 6, but what is the number? It's 5.56. Perfect. She got it right. You cannot have 0.56 number of DVDs, so the answer will be 6. If you watch more than 6 DVD per month, you should go with the subscriber. If you do not, then you should go to a video store. Anyone have questions? This is easy. I think everyone would know how to do this, right? They asked you this on the midterm. I hope everyone get this question, even though I don't think they'll ask you this on the midterm. Okay, second question. What factors other than cost would influence your decision? Yes? Location. Perfect. Anyone else? I know it's early in the morning, but come on, guys. Anyone else? Yes? Income? Possibly, yeah. If you're rich and you don't care about the $21, just pay it. If you care about your money, you don't want to pay for it, then of course we'll think a little bit harder on this situation. Anyone else? Internet. Yes. Perfect. Wait a second. You can only rent 3 DVD at a time. Is it an internet service?
Yeah.
I don't know. I assume you're right. If you have internet, then you will go with it. If you don't, then you wouldn't go with it. Okay, so some answer we have as the official answer, but all of the stuff you guys said are perfect. They said sometimes people don't return the DVD on a timely manner, which means you might get charged extra than just this $3.95, right? So if you're the person who, always come late to class, you always miss your bus, you always miss this and that, maybe you should go with just the $21.95 because you will most likely miss the deadline of returning this DVD to the video store. Another one is sometimes Netflix, they might carry DVD that you guys want to watch, but the video store doesn't, and vice versa. So if that's the case, you will go with the one that you prefer. For example, if the video store have a movie you really, really want to watch, you should go with this option instead of this option. These are common sense. I think all of you can think of something to write on the midterm, right? So I will pass this question. Let's go on to the next one. Any questions before we move on? Chapter 2. Okay, the second question we're doing today is Chapter 2, number 39. This is a tougher question, requires a bit of thinking for you guys to think about what is variable cost, what is fixed cost, and what is mixed cost. Cost is big on your midterm. Make sure you understand all of these. Marginal cost, whether this cost will be counted towards the total cost. You guys have to think about this. So make sure you understand everything we're doing in tutorial and everything your prof teach you in class. I guarantee you on your midterm, there will be something related to it. So, 39 says, for each account, indicate whether the account represents a fixed, variable, or mixed cost for the operation of a local practice office. If mixed, indicate whether it's predominantly fixed or variable. Explain your answer. Some of it is a bit tricky. You might have to think a bit. You need assumptions, so we're going to go through them, each of them individually. So the first one, staff wages. What do you guys think? Go ahead. Fixed? Why is it fixed?
Because salaries are usually fixed.
Okay. Any other opinion? She said fixed because salary are usually fixed. Yes?
I think it's a direct labor cost.
You think it's variable because it's a direct labor cost. So we have fixed, we have variable. Anyone else? Anyone say mixed? Yeah, it's mixed. You guys want to discuss amongst yourself a bit? And then we can talk about this in a bit. Okay, how many of you guys think this is variable? 1, 2, that's it. Fixed. 1, 2, 3, 4, 5, okay, more I guess. 6. Mixed. Oh, that's the majority of the room. All of you are actually right. It depends on the assumption that you write on your midterm. So this is what you could say. It could be variable because part-time staff, they are paid on an hourly basis, so it's variable. It could be fixed because some staff, they get salary. Salary is a fixed amount, so it is fixed. Or it could be mixed because some people, they get hourly wage, or they could get salary plus overtime, and overtime is the amount that's mixed. So if some of you think all of the above, then you're perfect. If not, then you guys can explain your answer on your midterm, and hopefully, I think you'll get some mark. Second one, it's also a wage. Now it's tricky now, eh? Is it variable? Is it fixed? Is it mixed? Anyone? Sorry, what? Yes? It's fixed. Anyone else? Do we all agree it's fixed? Why is it fixed?
Because I don't think it will, it will change the number of that position that all that.
This wage is usually fixed unless overtime is regularly scheduled, then it will be mixed, but usually their wage is fixed. So it's either fixed or mixed. If you think it's mixed, make sure you explain you think maybe overtime will be regularly scheduled, so it will be mixed. Otherwise, it usually will be fixed. The third one is not tricky. I hope everyone get it. Rent. Fixed? Anyone else say no? Then it's fixed. Majority rules. Fourth one is easy too. License. Fixed. Awesome. Perfect. Fifth one, insurance. Anyone pay car insurance? Anyone pay condo insurance? Fixed? Yes, fixed. Office supply. Tricky one again. Still want to say tricky, you guys? Stop answering me, eh? Office supply. Variable, okay. All three. Anyone else? It's mixed, but it is mostly variable. When you think about office supply, there are certain stationery we always need at the office, but when you have new staff added, you'll be buying additional stuff for them, right? So it will be mixed, but then predominantly variable. Next one's easy, professional dues. Or professional subscription. Oh, professional dues. G, sorry, looking at two different ones. Fixed costs, yes. H, professional subscriptions. Fixed costs, perfect. I heard somewhere from there. Next one, Canadian pension plan. It's fixed, is it? Is it variable? Is it mixed? Variable? Or could it be mixed? Fixed? Do you guys know how CVP works? Okay, so I'm learning here now because I've never touched CVP in my life either. Over here it's telling me if employees they get paid the same amount each year, then CPP will be fixed because it's based on the salary you're earning. If you guys earn salary, you will know your company pays EI and CPP for you. The EI and CPP amount is based on the salary you're earning. So, CPP will be fixed until your employee reaches the maximum amount of CPP per year. So there's a max, there's a cap. If you reach it, then that's the max you have to pay. Some employees may never reach their max, so their CPP will remain variable if their salary keep increasing. And if employees are paid overtime, that means your salary increase, right? When your salary increase, your CPP increase as well. So the CPP amount you're paying is mixed. If your salary stays the same, then CP is the same. If you're paying overtime to them, that means their salary increase, CPP will increase. Usually it should be fixed, but then because there's the overtime, there's other factors that's included in, it is mixed. Property taxes. Anyone pay property tax? Anyone own a house? Guess not. What do you guys think about property tax? It could either be variable, fixed, or mixed. Throw something out, it might be right. Yes? Fixed. Fixed. Property tax is fixed. Advertising cost. Fixed. Awesome. Any questions before we move on to the last one? Told you it won't take more than an hour. There's only 3 questions. Okay, chapter 3, question 29. This is the only harder calculation question we're doing today. This will be something that you will most likely see on your midterm, even though it wouldn't just be like this. It will be trickier, I assume, or harder in a way. But break-even is a key concept. I think everyone should master the concept. If you have questions, let me know. So the question says, Maiden Company, which is subject to 40% income tax rate, projected its income before tax for next year as shown here. Their sales, and they sold this much unit for this amount of money that's going towards their revenue. There's the cost, the variable portion, the fixed portion, and then after subtracting those costs from the revenue, they got the earning. So the first question is, what is the break-even unit? Oh. Is it 29? Can you guys see? Okay. Unit, how much did they make? Two. And their pre-tax earning is what is the break-even quantity? What does break-even mean? CM equals to fixed cost. I want a definition. This is what someone just said, but anyone can give me a definition. Or what you think break-even should mean. Sorry, what? The cost equals your revenue. In another word, your revenue minus your cost is 0. So if you produce a certain amount of quantity and the amount you're earning and the amount you're spending is the same, that is your break-even number. You guys learned this in economics, right? Should come back to you. What is revenue? Sales. What is sales? How do you find sales? Sales can be broken into two components. Price times quantity. What are the costs you have? There are two types of costs. Variable and fixed. Awesome. Okay, I write too big. Sorry, guys. Which one is dependent on quantity? Your variable cost or fixed cost? Awesome. So this is your variable cost per unit times quantity, right? So if we expand this, it will be, oh my God, I don't have place to write it anymore. Price times quantity minus your variable cost times quantity minus fixed cost is 0. What are we looking for here? Break-even quantity, which, where is it? Is the P? Is it a Q? Okay, it's not tricky, yes. So we're supposed to look for this. Do you know fixed cost? Do you know price? No. Can you find it? How? Yes. Over here, it says revenue equals P times Q. I'm going to write it as sales just so it makes more sense to you over here. Sales amount, quantity, the quantity amount. So what is the price per unit that you're selling? You made this much, you sold this much, according to this income statement, right? So what is the price per unit?
50.
Let me check. Yes. I should trust you guys. This is, yes, $50 per unit. So we got this. We got this. What's missing that we don't know? Variable cost. How to find variable cost? Per unit. How to find variable cost per unit? Everyone agree? Divide this, which is our variable cost, by the number of unit that they produced. What's the variable cost per unit? Can someone give it to me? What's the variable cost per unit? $12.5. Thank you. And then your fixed cost is, can you guys solve it from here? Okay, I'm going to give you the answer. Go home and solve this out. I'm sure you guys will get it. The break-even quantity is awesome, 80,000 units. It's not hard, right? Second question, if they want 4.5 million in pre-tax earning, what is the required level of sales in dollars? What are they saying here? Let's draw it out. Can I erase this? They want to have 4.5 million in pre-tax earning. Pre-tax earning. So over here, it's 4.5 million. They're asking you, how much do we need to make in sales? How do we go about doing this? Anyone have a clue? Want to throw anything out? Yes.
So I think you just work backwards because you know your pre-tax earning, you know the variable cost and fixed cost.
How do you know your variable cost?
Is it still the one that's given to you, or you have to calculate that?
This variable cost is for this amount of unit you produced, right? Which gives you this much of pre-tax earning. Right now, you want to earn this much. It means you have to produce a different amount of quantity, which means your variable cost will be different. Does that make sense? Awesome. Yes. You just use the 12.5 and 50. Is the same, okay. And then keep going, good. Use the same thing, okay. I agree. The only thing different this time is that we're not looking for break even. This is not 0 anymore. This is 4.5 million. So the only thing you'll be doing different will be replacing 4.5 million with a 0. This way you're going to solve for the quantity, right? After you solve for the quantity, you're going to times it by 50 again to find your total sales because they're asking for total sales. Does that make sense? I'm going to tell you a different approach to do this question, which might make more sense or less sense depending on who you are. So, oh, God. Oh, this is so heavy. Can you go up? Okay. This is one methodology. Another one. What is your variable cost? 12.5, right? What's your sales price? 50. What's the ratio between them? What's the ratio between 12.5 and 50? Is it just divide them? Is it 25%? It means for every unit you're selling out, let's say you make $50, you have to pay 25% for your variable cost. This means, where's my, there. If I made TS amount of sales, I'm paying 25% of TS in my variable cost. Does that make sense? And your fixed cost stays the same. So instead of finding the quantity and times it by 50, all you have to do is do this. Your total sales minus 25% of total sales minus 3 million equals 4.5 million. You find TS, that's the answer. Either way works. Whatever makes sense to you, you do them on the midterm. Any questions? I see confused face. Is this confusing? No? No? Okay. Can I move on? Next question. If their net asset is 36 million, what amount of revenue must be achieved for this company to earn 10% after-tax return on asset? How do we solve this? What is after-tax return on asset? What's return? What does return mean? Profit. What does asset just? What do they want to achieve as the after-tax ROA? How much net asset do they have? 36 million. Since it is the after-tax ROA, we're talking about the after-tax profit, or people like to write it as earning after tax. So what is the earning after tax? Your after-tax ROA is 10%. Net asset is 36 million. What is your EAT? Earning after tax. Is my zeros right? Okay. This is not confusing, right? So what we have now? We have our earning after tax is this much. What are we looking for? We're looking for revenue. How do we go there? Let's go back to this again. This is a useful. Where does my EAT go on my income statement? My earning after tax, my 3.6 million. Where should I put it? Over here? Over here? Over here? Over here? Or none of it? Awesome. So what should we be looking for next? The pre-tax. Awesome. Good job. I didn't trick you guys. How do we find that? What is our tax rate? 40%. Our pre-tax earning. Okay, I'm a visualized person, so minus our tax amount is our earning after tax, right? Does it make sense? Pre-tax earning minus tax is your earning after tax. This is 40% of your earning before tax, which is basically the pre-tax earning. So you know your EBT minus your 40% EBT equals this amount, right? What is your EBT? What is your earning before tax? 6 million? No questions so far? So where do we put the 6 million? Over here. Awesome. What we're looking for again? Awesome. We're looking for this, right? What do we know? We know this. Always stays the same. Fixed is fixed is fixed. Can we use equation similar to this? Can we use an equation similar to this? So basically, and then you solve for total sales. Or in this case, you solve for quantity and times it by 50. Should give you the same answer, right? I'm going to tell you the answer. Go home and solve it. PS should be $12 million. Do they all sound the same now? Every time they will give you some trick, you go look for this. You plug into some sort of formula, and then you look for whatever they ask you to look for. So all you have to do is always go look for one of the known, but you have to solve for it. Okay, last question. If this company wants an after-tax earning of 30% of sales, what is the required level of sales in dollars and unit? It's a bit different. What are they asking us? Oh, come down. They want the earning after tax to be 30% of sales. What should we do? You find EBT. Yeah, we always have to go back and find EBT, but what should we do? Look at this. Look at that formula we've been looking at for the longest time. Price times quantity minus your variable cost per unit times quantity minus fixed cost equals to your earning before tax, right? What do we know? We know this? Do we know P? Do we know P? Only one person knows the price? Do we know price? Wake up, everyone. Yes. Do we know variable cost? Do we know fixed cost? Do we know this? How should we find earning before tax? You have to what? Earning after tax divided by 40, divided by 60%. But do we have an earning after tax? It's only 30% of sales, right? Should I give you guys a moment to think, or you guys just want me to tell you the answer? Guess you guys just want to copy. Okay, let's do it. What is my total sales? I'm not going to give it to you. I don't feel like you guys should copy. You guys should think. How to find total sales? There's two components. Price times quantity. Earning after tax is 30% of price times quantity. Do you know price? Yes, you do. So my earning after tax per quantity would be 30% times 50. Does that make sense to everyone? So my earning per tax per quantity is $15. Yes? Everyone's following? What is my earning before tax per quantity then? Someone just told me. It's you, right? It's 15 divided by what? 60 divided by 1 minus 40%, or 15 divided by 60%. What is that? 25. Thank you. So my earning before tax per quantity is $25. So my EBT would be 25 times Q, right? Does that make sense? You don't need this anymore. You have 25. You have everything. Only thing you're solving is quantity. So what is the quantity you will need to sell to get a after-tax earning of 30% of sales? You solve this equation over here. This is 50. This is 12.5. Fixed cost is 3 million. After you solve this equation, you should get a Q of? Anyone calculated it? 240,000 units. What did they ask us? They said, if this company wants an after-tax earning of 30% of sales, what is the required level of sales in dollar and unit? We got the unit. How do we find dollar amount? Times it by 50. Any questions? I think after this, you guys realize, regardless what they give you, they're always asking you guys to find this, plug it back in, and look for something. Key equation, memorize it. Should be self-explanatory too. that's all for today's tutorial. I have 3 questions, and these are the 3 questions. You guys can have an early Friday off. Have a good weekend, everyone. If you have questions, come up and talk to me. Thank you.